All right, welcome back. We got a stock market update for you. What a week, what a month. So this week we had a lot of data coming out. We had the CPI, and we also had the PPI, and we had the Federal Reserve meeting as well as their projections. So I don't have anything pulled up here, but I'm just going to tell you the news. And if you look at your 401k, you already know. Things are looking good. We've got inflation cooling way off. We've got the Fed. They didn't hike rates again. And this is the first meeting that I've seen that they've started really talking about rate cuts. Now, I don't think that they should cut. I don't think they will cut until they really need to. But the fact is that they've raised interest rates so much, so fast to fight inflation, and their goal is 2% inflation, and they're around 3% rate of change, right? So again, the prices aren't coming down. The rate of change is slowing, but that's the goal that the Fed is looking for. And as well, we're seeing the job market soften a little bit, but it's not falling apart. So that's great because we're seeing the economy hold up relatively well, but we're also seeing the rate of change when it comes to inflation slow down. That is what the Fed wants to see. That's where you're going to keep hearing the soft landing. Now, will we have a soft landing? I have no clue. I don't know. But what I do know is that interest rates have plummeted from 5, and we are now under 4%, 3.9. So the last couple weeks here just really fallen off a cliff. So what that means is that's going to ease for the banks, that's going to ease for the real estate market, that's going to ease for the auto market, that's going to ease for solar, anything that has to do with lending. It's going to be easier to get access to capital. So that's good. That means that more people are going to borrow money and put it to work in the economy, and you're going to see companies' earnings hopefully continue to stay steady or not decline or go up. So that's where we're at. We've got interest rates falling. Where do we stop? I don't know. So when it comes to interest rates and the bond trade, the TLT, I personally trimmed a third of the TLT. I was picking it up in the 80s, a little bit in the 90s, and I sold a little bit at 95. Sold a third at 95. It just moved so far so fast. I didn't expect it to move this quick. So I'm hoping we can get a little bit of a dip, and I'll add to this position. Because I'm in the TLT, not the levered, I'm holding this for a long time. But I did want to lock in some quick gains just to de-risk a little bit. That's me. Do what you do. That's best for yourself. So what else we got here? We've got the dollar. The dollar is also falling pretty aggressively, which is why you're seeing things like gold do well. You're seeing things like Bitcoin do well. You'll probably see other commodities do well also. Oil looks horrible, which is weird because that tells us, economy's a little soft. Demand for oil is weak. But we'll have to wait and see. We're kind of at a nice support level here. I was hoping we could get into the mid 60s and I would take a trade on oil. I'll make a video about that if we get there, but I'm being patient for now. What else we got? The Qs, all-time high, I believe. Yes, or at least a 52-week high. This probably is an all-time high. Yeah. Not quite. We're almost there. But again, just unbelievable move from October. That's just crazy. This is an all-time high. The semis, SMH. Look at that move. Again, these are just parabolic. So again, these are the times to be sitting back and not doing a whole lot. I wouldn't be Fomo trading in here. I wouldn't be just plowing money in at these levels just because we're so extended short term. This was a nice correction through time, not necessarily through price, but we had such a great move here. We digested those gains, made the next leg. So hopefully we can do the same thing where we just kind of chop sideways for a week or two, get the Santa Claus rally at the end of December, get the new money coming in for January, maybe a little correction at the beginning of the year, and then who knows from there. I have no crystal ball. I don't know. But it's great to see some of these moves here. And again, end phase. This is just an example of some of these beat up interest rate stocks. I mean, end phase has been destroyed. It should have never been at these parabolic levels, but end phase is a great company, but because they're a solar company and people need to borrow money to buy their products, the market does not want to own this while they're raising rates. So this whole time here was when the Fed's raising rates, and we're starting to see a recovery back up. Now, who knows? Maybe we don't break through this line. Maybe we turn over again. Maybe we go back up to 150, 200. I don't know. But you're going to see this for a lot of companies that have been beaten down because of interest rates. And that's where I think there's going to be some opportunity, is looking for quality companies that have been destroyed because of interest rates. Now that interest rates are falling and looks like the Fed is done, their next move is going to be a cut. And again, that is going to be because there's softness in the economy or they're seeing deflation. Who knows what that'll be. But you want to find quality companies that have been beaten up. There's some financials that are interesting. I don't really like banks to own because you could own Lehman Brothers at all-time high and then a few months later it's zero. So I just don't know enough about what's under the hood with some of the financials. Something like a Microsoft, I'm not too anxious to go jump in and go buy it. I would like something like a Google, AMD, a semi. I mean, just look at that. Just looks just like the SMH, but much higher gains percentage-wise. So technology, very overbought. Now, being overbought and extended doesn't mean it's going to crash. We can stay overbought for a long, long time. That's a sign of a bull market, which we are in a bull market. And there's a lot of cash on the sideline that needs to come into the market. So they're going to be buying the pullbacks whenever we get those. So again, no FOMO here. Opportunities to look out for. I do like REITs. That's an interest rate play. The one that I own is Vici, whereas Vici doing really well here. We're not too far away from all-time highs, but again, this was the decline for the interest rate hike, and we shot up after that once it looks like the Fed is done. So I'll be looking at some other REITs. Realty Income Corp's another one I like. I haven't bought yet, so I'll do an update on that. I do think there's some small caps that could be interesting, but you got to know what you own there. They're similar to REITs. You could either buy a basket or you got to be specific on know what you own. Tech and semis. Semiconductors, long-term hold. I will not sell any of the semis that I have, even if they double, and maybe if they double, I'll trim. So to me, wait for a decent dip, or just a dip, a correction through time. Doesn't have to correct in price, go down. It just maybe consolidates for a little bit. Selling options. I did sell an option on Tesla today. Let's see here. We look like we could be breaking out of this little, I don't know what you call this here. This little pattern here. We could be poking out. We could drop back down. But I sold the 275 call. I think that's 20 days away, so pretty short term, just because we had a 5% day. Nice little pop here. So we'll see what happens there. Amazon's another one I'm looking at possibly buying, adding to. I still need to fill my position there. We had a nice red day today, so we'll see. But waiting, patient, super patient right now. I was aggressive in October. I'm super patient right now. Bonds, cash. I have that red now. The cash that I have, I'm being patient. but I want to put it to work. And I don't want to put it to work in bonds. A few weeks ago, I did move some money out of a money market account. And so I would most likely look to put that into a couple of REITs and until we get a tech or semiconductor dip. But not a whole lot other than that. Great news this week. Great price action this week. Santa Claus rally is in full effect. But I would really hope for a week of just a little bit of red, a little bit of selling. I think you are starting to see some of the big caps sell off. You're seeing Microsoft today down 2%. Just again, these have moved so far. I think people are going to take some profits in these big cap and start looking to move it into small caps, mid caps, banks, solar, things like that. So I'm waiting for a nice little correction. People taking profits there, and I'll scoop in and pick up some of those mega caps. But again, I think we're looking really solid, really, really good. So that's all I got for you guys today. This is a fun update to have. I got my green shirt for the green stocks, and that's all I got for you. I'll do a crypto market update. But until then, we'll talk soon. Peace out.